Good morning, everyone. Welcome to Pre-Market News and Views. Today is Monday, January 30th, 2012. Let's get right into the charts here. There's always a lot to cover. I'm going to start off with the S&P 500 E-mini futures. You'll see they're trading down about 9.5 points right now, right to around that 1303 level. The market right now is coming under a little bit of pressure. Obviously, when the market is weaker, it means the U.S. dollar index is stronger, and the reason why the dollar is stronger today is simply because there are more problems coming out of the European Union. Earlier today, it looks as if basically you had Portuguese credit default swaps really jumping off the charts. I believe they rose to a record 40%. So that is a huge move. We're going to see if these credit default swaps start to trigger some warning signs here and create a little domino effect in the European Union. Right now, the market is down about 9.5 points, which is not all that bad considering the recent rally that the markets have had. But nonetheless, this is a big problem. It seems to be getting swept under the table each and every day. There is a meeting going on in Brussels today, and we'll see what comes out of it. But over the weekend, it looks like Germany basically told Greece that the European Union should take over your finances, and Greece rejected that saying that they will continue to pay their own bills and not have somebody overlook them. So again, it's going to be interesting how this all plays out. But believe it or not, it's not about Greece anymore. It's about Portugal. It's about Ireland. It's about Spain. Uh, it's about Italy. I mean, these are the big problems that are still looming and have not been fixed, even though there has been a lot of money thrown at the problem to just try to keep these things inflated. So once again, we'll see if this comes home to roost. But the European debt crisis is in full circle, and once again, we are dealing with these issues all over again. Nothing has been resolved, nothing has been fixed, and this is where we are at this stage of the game. And what has happened now is the credit default swaps are starting to trigger, and that is the big scare factor. Okay, let's get back to the market here. Let's talk about a few other things that are out there. Let's start off with oil today. You're going to see that spot crude is trading lower by about 50 cents, so a decent little push down in crude. If we take a look at the USO, you're going to see the USO is trading right around the 38.06 level. That is a little bit lower from the close on Friday, which was 38.30. And we're trading down a little bit. Remember, if the dollar strengthens, will usually cause oil to pull back. Now, oil is still has somewhat of a geopolitical war premium built into it when you're dealing with Iran. So again, oil, I don't expect it to just fall apart, but it should pull back if the dollar remains strong today. Let's take a look at gold. Gold has been all the rage as of late. Now, gold today, which I should just say GLD closed at around 169 on Friday. Today it is trading down to 167.79. Has come off the lows a little bit, but nonetheless it is down decently to start the day. Spot gold, I believe, is down about $9 or $10. So nothing major there, but you are getting a little bit of a pullback in gold and also in oil. And if the dollar strengthens, that is normally the case. So again, gold and the stock market are synonymous. They will trade together. The U.S. dollar and the stock market will trade inverse. Okay. Here, let's take a look at the U.S. dollar index. This way we get a good glimpse of what's going on there. You're going to see a nice little pop today for the dollar, trading up around 44 cents. It's a decent move on the dollar today. Nothing crazy. What's going to happen now is we're going to have to see when the opening bell rings at 9:30. Can the dollar hold its gains? A lot of times what happens is the dollar will trade strong into the opening bell, and then some institution will come in and kill the dollar, and that'll inflate the market. So we'll see if that is the case. But nonetheless, watch and we'll see if the dollar could hold. But right now the dollar's holding pretty well. But at 9:30, can it hold up or does it sell off? You'll see that each and every day. Look at this here. Here, right here, 9:30 in the morning, right around here, and boom, look at the dollar fall and the market rally. So we see that each and every day. Will we see it again today? That's the big question. So again, be a little bit cautious, a little bit careful. You don't want to take anything for granted. Now, before we go into stocks, I just want to talk about Asia last night. Asia was down across the board. The Shanghai index finally opened up after a week of vacation for the Year of the Dragon holiday. Once again, the Shanghai was down about 1.5%. So that's a decent little dip to start the year with the Shanghai. So Shanghai was down about 1.5%. Last night you had the Hang Seng down 1.6%. You had the Nikkei down about 0.5%, Australia was down about 0.3%. And I believe, let me just double check here. I believe India was down sharply last night. Yeah, India was down over 2%. So Asia got hit across the board. Watch for weakness in a lot of these Indian ADRs. I was looking at Tata Motors over the weekend, and I just saw how extended this stock is on the daily chart. Needs to pull back in. Watch for pullbacks in Tata Motors. Also, Infosys is another market leader. You got to watch for a pullback there as well. As for Chinese ADRs, I believe Baidu is going to have earnings after the bell today, so that may have a tendency to hold up. But nonetheless, Chinese ADRs could come under some pressure today, especially if the U.S. markets are weak. So you want to watch stocks like Baidu, Sina, Sohu. These are all going to come under some pressure. You might even see some pressure in China Mobile. So just watch for a little bit of weakness in the Chinese and Indian ADRs. Okay, both groups, both ADRs will be on the weaker side, especially if the U.S. markets are weak today. All right, let's take a look at a couple stocks. There's not really all that much out there. I did see Amlin earlier was trading up. Stock's trading around $14 or so. Very, very good move. To be honest, I wouldn't touch it here. Stock has a tremendous amount of resistance right around 1460, maybe 1461. Right in that area. There's a lot of resistance on the chart. And then after that, $15. But I would not chase Amlin Pharmaceuticals up here at this level. Let's take a look at Pep Boys. Ticker symbol is PBY. This is the automotive, the car automotive store. Again, I'm not sure what happened there, but that's a solid pop up, $15. It's a very, very good move. Looking at the charts there, I'm not exactly sure what would happen, if it was earnings or what it was, but that's just a very, very good move. I believe it's a buyout. Okay, that's it. So Pep Boys is getting bought out, and I believe they took a buyout offer. Okay, that's it. So leave Pep Boys alone. There's nothing to do there. I was going to say don't jump in on it anyway. But nonetheless, that is a buyout deal. The stock is done. But congratulations to anybody who owns Pep Boys. You're getting bought out for basically $15 a share. So pretty nice little move there. And once again, that's really all we're seeing this morning ahead of the opening bell. There's some movements in a few different things, but nothing really noteworthy. So again, we'll just take it, in stride today. It's a Monday. Market's coming under a little bit of morning pressure, but it's nothing all that tremendous. We'll see if it does pick up and accelerate as the Greek and Portuguese credit default swaps start to trigger here, and that could be problematic. Okay, everybody, have a great morning, great trading day, and I will see you all on the charts tomorrow. Take care now.